Lower. Okay, no problem. Those are online. Can you hear me? Once again, confirmation.
Yes, sir.
Okay, all right. So can anyone tell me 2 examples of operating activity? Anybody from online? Can you just list out 2 activities that come under operating activity?
Salary,
Yeah,
selling of goods, salary,
selling of goods, payment of salary.
salary.
Yeah, these 2 are example for operating activity cash outflow. Sorry, one is outflow, one is inflow. Sale is inflow, payment of salary is outflow. Okay. Any 2 other example for investing activity? Sorry, purchase of purchase of land. Purchase of land and building. Okay. Anything else? One more. Purchase of machinery for cash. These 2 are the cash outflow of investing activity. Okay. Then financing activity, any 2 examples? Capital. What is capital? You are asking a question, what is capital? You are asking a question to me, what is capital?
That is financial activity.
Capital is some word, right? Equity. Okay. Preference. Dimension. So many points you are telling. What is the example for financing activity? 2 examples for financing activity. Tell it in clear sentence, no? Or tell it in full form.
The loan,
Sorry, sir?
taking the loan from bank,
Taking the loan. Not loan.
Pay-
Taking the loan. Raising loan. Yeah.
Yeah.
Likewise, your capital can be converted into raising capital. Issue of capital. Issue of debenture. Issue of preference capital. All these are example for cash inflow for financing activity. Very good. So you all understood these 3 basic concepts of cash inflows, okay, or outflows. Now today we are going to discuss the other concept, that is cost accounting. Cost accounting. You remember in the beginning I was telling you the accounting as a subject can be classified into 3 major academic branches or academic classification. One of them is financial accounting, another one is management accounting, another one is cost accounting. Okay. Of course, in real time, in the business organizations, these 3 may be done by a single ERP. Okay, in today's computerized accounting system, a single ERP will take care of all these 3. But in academics, for learning purpose, okay, we have these 3 classifications. Okay. Right from the point in which the transactions are happening and how do you identify such transactions, till preparation of financial statement, we have some mechanism. Those mechanisms put together, we call it as financial accounting. Do you understand? Right from the identification of economic transactions, economic activities, and how to record, how to classify, summarize, find out the result, presenting that result in a prescribed format to the various stakeholders. If you do any activity from this identification till the presentation, we call that accounting as financial accounting. Whenever I say accounting, it refers to financial accounting. If I do not have any prefix, it automatically refers financial accounting. Okay, then after having data, financial data, after having prepared the financial statement, we need to understand some deeper concept into the company, deeper understanding of the company. What is the sales? Is that sales is increasing from year on year? Last year, what was my profit? Current year, what is my profit? Am I growing? Am I improving in my performance? How I am compared with my rival companies? Am I better or they are doing better, or still I can do better or not. This kind of comparison is possible by analyzing such data which are found in the financial statement, which we already done in the concept called ratio analysis. So that is called management accounting, analyzing the financial data to find out the deeper insight about the company's performance or company's financial position is called management accounting. Now the third aspect is cost accounting. What is cost accounting? Can you, guess what could be the concept called cost accounting? Yes, sir.
Estimation and prediction of
Estimation and
prediction of planning.
estimation and prediction of a planning. What is that? Planning means? Okay, anybody? Cost accounting.
Cost accounting is for planning of the company's financial investments, for example, capex, capital expenditures, or the operational expenditures to ascertain that the cost accounting is required.
Is it not management accounting? Capex, what is capex? Capital expenditure. What is capital expenditure? Buying fixed asset, investing in fixed asset is called capital expenditure. Accounting, basic financial accounting, we divide the expenditure into two: revenue expenditure and the capital expenditure. Buying of raw material by a manufacturer is called revenue expenditure. Buying a machine by a manufacturer is capital expenditure. Which machine is to be purchased? At what rate the machine can be purchased? It's not about just cost accounting. It's about financial management actually. In academic discussion, that comes under financial management, which you study in the next semester. How do you manage your money? To buy a machine, we need money. Okay, that is what financing activity of a business, where you get money. After getting money, how do you employ that money? How do you utilize that money? That's called investing activity. So investing activity, financing activity, and operating activity. In addition to that, profit management. All these four things put together, we call it as financial management. That is not a duty of accountant. That's a little higher order job. It needs little more authorization for doing it, and also it needs some professional understanding of how to do it. All right. But accountant is just dealing with the result of such financial management. Suppose your company decides to buy a machine. On purchase of the machine, the accountant is writing the journal entry. And later on, the management accounting is analyzing what is the use or what is the comparison of buying this machine with your rival company. Whether you achieve the purpose of buying this machine or not. What is your profitability? What is your efficiency? These are all analyzed by management accounting. Okay, but what is cost accounting then? Yeah, that gentleman is, somehow correct. Estimation of what?
Analyzing in the ascertainment of the cost for each account. For example, in a company, each cost centers will be there.
Okay. Note down these points. Cost center. Okay, we'll discuss that. You remind me.
Yeah. Each in an organization, each center has a cost center.
Mhm.
Each account has cost center. So to determine that each center how much cost it is, where we can control the cost. So this study about is all cost accounting.
Why do you confuse? Why do you take so many words? Very simple way. Our people are not that much.
People want
Yeah.
where to invest, how to invest.
That is financial management now.
Budgeting.
I have resources. I'm going to decide where to invest, how to invest, when to invest. All those things. Financial management, right?
Budgeting of expenses.
Okay, budgeting of expenses. Yeah. Simple words.
Establishment of budget, target cost, actual cost, and trust.
You are more technical than we want a short way to understand how to go to this. But please get into 350 first. And rover. Don't tell sir, if you go straight, till board will come. Then again, Madiwala, then government. So if they say like the people will get confused. They'll get down in some other place.
Estimation of expenses, controlling costs.
Simple, no? Actually, we are here. Fine, that's excellent. Simple. One of your classmates is telling, sir, cost accounting is nothing but a process of estimating cost of a product or service which we manufacture or render. And also, it's a process to have control over the cost. Simple. Only two words are important here. Two key words. Estimating, control. Of what? Of cost. That's what cost accounting. Cost accounting is a discipline or a branch of accounting that gives us some of the methods, mechanism, process, procedures by which or applying which we can estimate the cost of a product or service, and also we can exercise control over the cost. Is it clear? What is cost? Price. For what price I buy? That's the cost of that price. Goods, what is what? Suppose I'm buying this remote control. If I pay 200 rupees, the 200 is the cost for me. The price what I pay to acquire certain thing, the value, the monetary value, what a person or business pays out to acquire certain thing. The thing may be a service, or thing may be a product. Okay, so that's called cost. Why do we need this? Suppose you are approaching a manufacturer. Suppose the another university wants to give notebook for all the students. Notebook. Okay, some 50,000 notebook is required by the other university. It is approaching a manufacturer of a notebook. Notebook company is being approached by the university. And it is asking, what is the price of one notebook? He is telling, sir, what kind of notebook you want? Again, we cannot say simply answer. 360 page notebook or 180 page notebook or 100 page notebook. But the page number, page should be there in the book, one notebook. Ruled notebook or unruled notebook. What the size of the notebook? Full size or half size? What is the wrapper should be? Customized wrapper you want? The cover page. Customized cover page you want, or a simple normal standard cover page you want? Customized means university logo, university name, and some other details of the university. If you want to print in the first page or not. These are the questions asked by the supplier of the notebook. I mean, the manufacturer of the notebook. Then you are telling, no, sir, I want just a standard, full size, 100 page notebook. That's all. What's the price? Then they're telling you, sir, wait, I will just buy paper, I'll make a notebook, I'll find out the cost and I'll tell you. If it is an answer from the notebook company, we may not be in a position to entertain them because we want the price immediately. Quotation. That's not what? Quotation. Before you buy anything, we ask quotation. Normal individual also. Before you buy a computer or laptop or any mobile phone or car or a bike, we are asking for quotation, right? That's the first step. You just go to different vendor. We'll ask. We have a product in our mind. We'll ask what is the price for the product in that particular supplier. He may sometimes influence you to buy another product because he will say some features of another. We may get some kind of influence. That's different. But in general, if you decide to buy one particular product, okay, a laptop, we just have a configuration and other description, everything. What is the price in different companies? Or same product, same model as well as the brand you decided. Lenovo, I want 12th generation, 12th gen computer, laptop I want. Okay, if that different showrooms are available, you are checking it, the prices. How do you decide which showroom you have to choose to buy? How do you decide? Same quality with a low price, with a comparable less price, we will decide. Similar to that, businesses will also do that. Businesses will be very much keen in this process. Sourcing the vendor. Somebody may be working in that area. Sourcing the vendor. After sourcing the vendor, we have to decide which vendor is to be selected. Okay. So for that reason, we are asking this question to the manufacturer of the notebook company. Immediately, you should say, sir, this is the price. He should not tell us, wait, I will manufacture and come and tell you. If that is the case, nobody will entertain that particular company. So they have an experience, they know what is the process of notebook manufacturing, and they know how to ascertain the cost. After ascertaining the cost, they will add some profit, then they will give a quotation to you. But this is the quote for one notebook, 50 rupees. Then you are asking, sir, I am buying 5,000 notebook or 50,000 notebook. Why don't you reduce some more price? That's called negotiation, bargaining. Okay, or discount. It will result in discount. Now, the company wants a mechanism to arrive at the 50 rupees. That mechanism is nothing but cost accounting. That mechanism is one of the part of cost accounting. Another part of cost accounting is while really doing the manufacturing process, while really involving in the manufacturing process, wastages will be avoided. Unnecessary cost will be avoided. You should be very careful enough in reducing the cost without compromising quality. Suppose my competitor is buying one ream of paper for 5,000 rupees. Same quality of one ream of paper I am buying for 6,000 rupees. Then I am gone. Meaning I cannot provide competitive price to my customer, which is given by my competitor. I have to sell more price, I have to sell it for more price, or I have to compromise in profit. Both are not intended for a business. So, to price your product correctly or to estimate your product price or product cost reasonably or correctly, accurately, we need some mechanism. That mechanism is called as cost accounting. And when you do your process of production, you are exercising some control. Simple example for controlling: buying price for a reasonable price, competitive price, avoiding storage cost, avoiding unnecessary wastage in the movement of product. While doing the process, if you just waste your material, then material cost is inflated for your production. If you do so, you are not able to provide the material for your customer in a correct price. You have to compromise your profit, or you have to sell for more price. Both are not needed for a business. If you do so, your profit is coming down, or you will be losing your customer. If you sell it for a higher price, the competitive world, right? Nobody is ready to be loyal to you by paying something more for the same quality what they can get it from others for a lesser price. So in that way, we have to approach the subject called cost accounting. 1 second. No. I'll call you mail. Over, ma. So the methods and techniques, two are there in the cost accounting. Methods means through which we can ascertain the cost. Techniques means through which we can control the cost. There are so many methods. Methods means it depends upon the industry in which you are having a ascertainment. The gentleman was telling a cost center. What is cost center? We have two concepts here: cost center and cost unit. Cost unit is nothing but unit of measurement. Suppose remote control. What is the unit of measurement? Number. 1, 2, 3. Note to number. Cement.
kg.
Ton or kg. Ton or kg. Bricks. Number. Water. Liter. Like that we have unit of measurement. Per unit, what is the cost? To express the unit cost, we use the word unit cost unit. Cost unit is nothing but the lowest measurable quantity for which we are expressing the cost. Okay. Brick industry, one brick is equal to 10 rupees. Cost of manufacturing one brick, red brick, is called is nothing but 10 rupees. How do I arrive that? That's called cost accounting. But one brick, 10 rupees. Cost per unit. Per unit is nothing but number there. Number. Okay. In service industry, 1 ton, 1 kilometer. Suppose you are transporting, you are just getting a transport from Mysore to Bangalore, some commodities. How they are charging you? 1 ton per kilometer. Per ton per kilometer. How much? This is called cost unit. Cost unit differs from industry to industry, product to product, service to service. We cannot measure the same, we cannot apply the same measurement of unit uniformly for all the industries. Okay. Come to cost center. What is cost center? Cost center is nothing but a person or a machine or a place or any kind of operation for which we are accumulating the cost, we are totaling the cost. We are summing up the cost. Suppose to run EMBA executive program, what is my cost? Parents are able to estimate. So EMBA program is one of the cost centers of the university. Regular MBA program is another cost center for the university. ME, mechanical engineering, Master of Engineering, mechanical engineering is another cost center. cost unit per student. Per program, per student, it's a cost unit. So in that way, you would understand cost unit and cost center. So cost center is helping us to accumulate the cost for that cost center. In total, we can accumulate all the cost centers cost, we can get the total cost of the entire organization. Okay, so industry wise, we are having different mechanism. Sorry, we are having different methods of ascertaining the cost. The basic purpose of cost accounting is to ascertain the cost, but we cannot have a single simple mechanism or uniform mechanism that can be applied for across the industries to ascertain the cost of a product, because the nature of the business is differing from each other. So one kind of industry will be like this. Suppose you are going to buy a car. We are not going to give any prescription to the car manufacturer. You select what is available. You are selecting among availability. Okay. If you want electric vehicle, you are going for electric vehicle, then petrol or diesel, then depending upon your budget, you are selecting what is available. So those industries are called as producing for stock. They are not asking you what kind of car you want, 4-wheel you want, or 5-wheel you want, or which side steering should be there. Nothing. They will do a survey. Before they start manufacturing or designing a car, they will do a survey. That is different. Market survey they will do. What is more liked by the people? Based on that, they start producing. All products are identical in nature. Suppose Tata Nexon, a particular model. All products are identical in nature except color. Or in the particular model, in the particular color, all cars are same. Even 0.0001, there won't be any difference. So those kind of industry we call it as producing for stock.
MTS, we call it as MTS.
Sorry?
We call it as MTS, make to stock.
Make to stock. Okay. P is replaced by M, make to stock. Good. Make to stock. In this industry, cost estimation is just accumulating all the cost of manufacturing all the units divided by number of it. Suppose 10 car I made, I produced, 10 car I produced. The total cost for producing all the 10 car is 1 crore. 1 crore divided by 10 is equal to cost of 1 car, 1 unit. This is called uniform costing. Any industry which is doing make to stock, we can apply a method called uniform costing method to arrive at the cost of product. Okay. There are other industries. They won't make it for stock. What they will do? They will do it for prescription of the customer. Customizing. Suppose I have a piece of land measuring 30 by 40. I am approaching a builder. I am telling him, I want a residential house on this piece of land. Construct and give me what is the cost, what is the quotation. I am asking. He will not be able to give immediate quotation because he needs some clarity. He needs some points that need to be given by me. So 1,200 is there. How much square feet do you want to construct on it first of all? 3,600 I want to construct. 3 floors. Okay. You want to use brick or you want to use hollow block? What kind of cement you want to use? Column you want to use, or you want to use the basement, the golden style foundation. That style you want. Okay, everything you want to ask. So we are giving. Somebody may need 3 windows in the hall. Somebody may need only 1. Okay, the window again is a wooden window or some other interior. Yeah, interior comes later. But in the structure itself is different, right? Structure itself is different. Okay. So all those things we are giving. Now this industry is not making the goods for stock. It is making goods for order. So this industry should apply a method called the job costing method to arrive at the cost of that particular product. So it differs from industry to industry. Now in our class, we are going to discuss only one, that is uniform costing we are going to discuss, or it is otherwise called as unit costing. Like that, there are so many methods. Suppose refineries are doing process in a stage by stage. The output of one process is the input of the next process. process costing should be applied there. Process costing. If your industry is in the nature of process industry, we cannot apply either uniform costing or job costing to find out your cost. We have to apply another method that is called process costing. Like that, we have so many. Process costing is there, standard costing is there, operating costing is there, operation costing. There are so many. So many means depending upon the nature of the industry, we evolve a method to arrive at the cost. Then we name that method as some name. Okay. In our syllabus, in our understanding, we are going to take only one, that is uniform costing. It can be otherwise called as unit costing. Unit costing. Okay. Before going to that, element of cost for any industry for that matter, the cost can be classified into three categories. Is it there or not? Okay, I'll tell you. It can be classified into three categories. One is, okay, guess, any guesses? For a product, suppose a notebook you are telling it's 50 rupees. What would be the element of cost in that? The 50 already has profit. Assume that 10 rupees profit. Remaining 40 is the total cost. The 40 rupees of different nature, right? What are the different elements that can be there in the 40?
Raw material.
Material cost. Very first element is without material we cannot convert anything. So material cost. Okay.
Production.
What do you mean by production cost?
Salaries, manufacturing.
Okay, usually labor, the employee, the labor cost.
Transportation.
Okay, second one is labor cost. Okay, transportation. What is transportation then? What kind of transportation is there? In production of notebook.
It's a manufacturer.
You have to bring the raw materials from the.
That's it. Yeah. He is thinking something product mean transportation.
Procuring the raw material. After once the notebooks are ready, they need to be constituted.
Okay. So this is called transportation cost. But this is per notebook or it is for product? Suppose today one college is calling you, sir, I want 1 lakh notebook. You are sending to them. Another college is calling 50,000 notebook, you are sending to them. So that is different from production cost. It's after the material is made. The transportation cost, what you incur on bringing the raw material will be added up in the material cost itself. Suppose you are buying one ream of paper 5,000 rupees. To bring it, you are spending some 100 rupees. The cost of one ream of paper is 5,100. It is not separated. Cost, suppose you paid brokerage, you appointed some procurement agent, you have paid something for them also. Good raw material, cheap price, some company will do, agriculture producers, companies will do. Okay. So for them you are paying something. That's all added in raw material cost itself. Okay, then. Now material has come to you. You converted the material into finished goods, then. And while doing that, we need to spend some money on cash or with some monetary benefit you are taking. That's called expense cost. Material cost, labor cost, expense cost. Only three. If you take any product, the cost can be classified. An element of cost is only three. That is material cost, labor cost, expense cost.
The expense also comes under production. In
Which one?
Expense cost, is it part of?
See, don't confuse your expense and cost. In colloquial term, you may think that both are same, but here it is different. Cost is nothing but anything that you spend. Classification of cost, I am telling three. One is material cost, labor cost, expense cost. What is expense cost?
Like,
On addition to this labor and material, whatever you are spending to make the product is called expense. Suppose power you are using, power. Charge, what you are paying is expense. That comes under expense cost. So cost accounting, we have this heading called expense cost. All are cost, three costs. One is material, labor, expense. These three can be classified into two. These three, all the three can be classified into two. Direct material, indirect material, direct labor, indirect labor, direct expense, indirect expense. What is direct and what is indirect? How do you classify direct, indirect, direct and indirect?
Because for example, whatever the direct expenses are, expenses made for producing that product. For example, the raw material, purchasing the raw material is the product, it comes in the direct cost.
Okay,
And electricity paid, it comes in indirect.
okay. Anybody?
Or the buying the stationery, or buying the furniture for the office comes under the indirect.
Furniture is a cost.
Like furniture in the sense, for example, if I'm the furniture manufacturing company, then it is direct. But if I'm, producing the papers or books, but buying the furniture is, my indirect expense.
My question is purchasing furniture by a printing company or manufacturing company, manufacturer of notebooks. Is a cost?
It's asset.
It's not a cost.
It's asset.
To paying the.
One second. It's not a cost. First of all, don't confuse. Don't confuse with your all expenses as cost here. I already told you. Cost is nothing but anything that is relating to producing something. In colloquial term, buying furniture may be a, sorry, sir.
When we are classifying direct and indirect.
First of all, I'm telling you, it is not at all a cost. See, I am going to classify Indians into different states. You are coming from Sri Lanka. How can you call that you are from Tamil Nadu? Yourself is not at all, first of all. I am going to classify Indians into different state people. You belong to another country. How can you call us one of the states here? Similar to that, cost, the expense what is spending to buy a furniture is not at all a cost for me here. Then how can it be a direct or indirect? It can not be anything in this. Why? Furniture is an asset. Furniture is an asset. It is not a cost here in this context. Okay, it's a capital expenditure. So it is not a cost. So how can you classify a cost as a direct and indirect?
If there is some operation being done on the product,
Okay.
it influences the finished good directly.
Yeah, somehow, yes. Something you are trying to say.
We are paying monthly electricity bill direct, stationery. We have,
Monthly electricity bill you are paying, how it is direct?
Indirect.
Indirect.
First of all, you should know what is direct and what is indirect.
In some way, she touched upon.
Yeah.
Whatever example, even a color to print a notebook cover page,
Mhm.
that is a direct cost because it's impacting the output of the goods.
Mhm.
And whatever it's not impacting, but still have the stake in the impacting. That is the element.
So anything that you are spending is directly proportionate to the total cost of the product. That could be a direct cost. Without that, that material cannot be made. Indirect cost means there are some expenditure. Without that or alternative that we can make a product. Example, supervisor salary. It's an example for in the same notebook manufacturing industry. Okay, you are having a notebook manufacturing factory. In that, you are having a factory manager or supervisor. You are paying salary, monthly salary. One day, 1 lakh notebook was produced. Or 1 month, 1 lakh notebook was produced. The factory manager salary is 1 lakh. So, what is the per unit cost of factory manager salary? How much I have to add in the notebook for factory manager cost? 1 rupee. But next month, 50,000 notebooks were produced. Same salary I am giving to whom? Factory manager, 1 lakh. Now, what is the per unit factory manager cost? It is not directly proportion to the number of outputs. Sometimes there is no production at all. That time also I am paying 1 lakh rupees. Don't confuse with the fixed cost. It's somewhere relating to that, but it's indirect cost. Any cost that cannot be directly connected with the total cost of 1 unit of production is called indirect cost. Same example, paper you are buying, 100 page is equal to 20 rupees. 100 page, what you are using to make one notebook, 100 pages, 100 sheet, not page, 100 sheet, you are making into one notebook. 100 sheets are equal to 20 rupees. In the market you are buying, the ream of paper you are buying. Now to make one notebook, what is the material cost? What is the paper cost? To make one notebook, what is the cost of paper? 20 rupees. To make 2 notebooks, to make 4 notebooks, it goes into the same proportion. That's called direct cost. You are giving 5 rupees for one laborer to make to bind one notebook, to make one notebook, to manufacture one notebook. How much you are giving? 5 rupees. That 5 rupees is called as direct labor. 20 rupees is called direct material. Okay, and then for the wrapper printing, you are giving 2 rupees per wrapper. They are only buying a cardboard, something like a little thicker page. They only print some design and they will give to you. That is how much? 2 rupees. Or you are giving a board, they are printing and giving to you. That is 2 rupees. Now to make one notebook, how much you are spending? 2 rupees. If you want to make 10 notebooks, you have to spend 20 rupees. This is called direct expense. You are outsourcing this. You are giving the nearest printing price and you are telling that I want a colorful, the nature, something like that in the wrapper, attractive. Okay. So they are giving to you. That's called direct labor. Now come to indirect. If you want to make a notebook, we need something to bind all the 100 sheets, right? Somebody will do stapling the 100 pages, stapling. Somebody may stitch. Somebody may just put a gum and bring it together, bind it together. Then tape with the gum and binding a brush. Notebook is ready. It is optional for the company to company. Some company will choose to staple. It becomes staple size. Stapler pin they will take, they will staple it automatically. Some company will stitch it. Some company will just put a gum and bind it. So this expenditure is called as direct or indirect. You are buying pin to make one notebook.
Pin comes under direct.
Direct. Okay. Stitching.
That also direct, because each product it is adding it.
You know how much quantity you need for
One.
if that is the case, that is direct. If you do not know how much you are spending for 1 unit, as an average you are taking, that manager's salary,
For example, electricity.
electricity. Okay, but sometimes electricity may be a direct. To run for 1 hour, I am spending 1,000 rupees as electricity bill.
Depend on the industry.
Yeah, 1 hour machine is running means I am paying 1,000 rupees as charge, electricity charge. In 1 hour running of machine, how many units have? Producing. Then it is directly collected. That time it is direct expenses. Okay. Anything which cannot be directly proportionate to the output cost is called indirect. Example, factory manager salary, depreciation, factory rent, the premises rent. Okay, so all indirect costs, all indirect expenses, indirect material, indirect labor, put together we call it as overheads. We'll call it as overheads. Now come to this concept of cost sheet. In uniform costing, we prepare a sheet that accumulates the cost of each and every stage to find out the total cost, and total cost is going to be divided by number of units produced in that process. That gives us the cost per 1 unit. You can add the expected profit on that cost. You can arrive at the price. Okay. So look at this small table. It is told prime cost. What is prime in English? Prime means important, main, significant. So in the cost of any product or service, the main important things are these three only: direct material, direct labor, and direct expenses. If we add these three, we call it as the total of direct material, direct labor, and direct expense is called as prime cost. After adding prime cost, after arriving at prime cost, we have to look into the all indirect cost. Cost means it includes all the three. When I say cost, it is labor cost, material cost, expense cost. So now we just added with all the direct cost, direct labor, direct material, direct expense we added. We call that as prime cost. Now we are left out with which one?
Indirect.
All indirect cost, indirect labor, indirect material, indirect expense. Okay, now, when we say indirect, in cost accounting, we call it as overheads. What is overhead? Over and above the three heads of the cost, if you have anything else, that's called overheads. In all indirect costs is called as overheads. Indirect material, indirect labor, indirect expense. Okay, now if you have these three things, but you have different places, it will be there. Different places mean different functions. Manufacturing or production or factory, office, selling and distribution. These three stages a product is passing through. Production or factory or manufacturing. Next stage is to facilitate all these things. We need some office and admin to produce, to procure the materials, to give instruction, to follow technique, to buy machine, all those things supported. Office and admin will do. After production is done, based on the office and admin's instruction, that need to be sold out to the customer. For that, we need some support from marketing team. So that's called selling and distribution. So three stages are there, three functions are there in a company. Based on the place or the function to which the indirect cost is associated, we classify such overheads into three categories. Any indirect cost that is occurring in production process is called as production overheads or factory overheads or simply manufacturing overheads. Are you able to understand? Factory rent is an example for factory overheads. Factory manager salary is an example for factory overheads. Factory electricity is an example for factory overheads. Yeah? Any indirect expense, any indirect labor, any indirect material that were used in manufacturing process is called as production overheads or factory overheads. Okay, next stage. Any indirect cost, whether it may be material, whether it may be labor, or whether it may be expense, that are occurred in office and administration process, that should be called as office overhead. The function to which, the process to which that indirect cost is associated with, that indirect cost is called as prefix of that function and overheads. Office overheads. Here, similarly, any indirect expenses, any indirect labor or any indirect material that are used in marketing of the product, advertising of the product, selling of the product, storing, supplying, distributing of the product, those costs, those indirect costs are called as selling and distribution overheads. So first you are adding these three, you are getting a prime cost. Along with prime cost, you are adding factory overheads. After that, you are adding office overheads. After that, you are adding selling and distribution overheads. Now that is called total cost. We are adding profit equal to selling. Okay. So this can be done in a statement. That statement is called as cost sheet. Okay. Look at this. If you directly take direct material here, if you have only one figure, it's okay. But in reality, what will happen? You may have some stock left out in the last year. You may buy some stock in the current year. You may not use all the stock what is available for you to produce in the current year. So, how much raw material used is called as direct material? How much cost of, this is nothing but cost of direct material used for producing this many number of units. Maybe 10,000 units or 20,000 units, whatever it is. Okay. So, this is called material consumed. How do you calculate? Opening stock of raw material plus purchase of raw material minus closing stock of raw material, estimated closing stock. How many units you are going to use really? So I am going to use only 10,000. What is the cost of 10,000? Let me come here. Okay. Then plus employee cost, expense cost. All the things added together.
So what is the less closing stock of material?
Suppose you are having 100 units in the beginning. You are going to start producing. You are buying some 900 units. Totally, how many units are available for you to produce?
900. 1,000 plus 900.
1000 plus 900 is equal to 1900, no doubt. But in our example, I have how many units? 100 units. How much we bought? 900. Totally, how many units are available to produce? 1000. But I'm estimating at the end of the production period of this current year, I may have 200 units as closing stock. So what's the material consumed? Only 800. What's the price of the 800 that will come under this category? If the question suppose material only 1 lakh is given, take that out, that's it. Meaning that's the material what really consumed. We don't have opening stock, we don't have closing stock, we don't have purchase. If opening, closing and purchase is there means you calculate how much is really used. How much is really estimated to be used. What is the cost of that material to be used? Yeah. Opening stock 100, closing stock 200. In between you purchased 900. So how much units really you are going to use? 800. That 800 into price per unit. Raw material cost per unit is equal to this one. Is it clear, sir? Okay. You will understand or not? Yes, sir. Yeah. I'll show you a cost sheet. So this is the cost sheet. Look at this. Yeah. This is a full-fledged cost sheet. Look at this. Direct material consumed. You know how to calculate this? It is also given there. Opening stock of raw material plus purchase of raw material minus closing stock of raw material is equal to material.
Always closing stock of raw material is the estimation only.
Estimation only. How many units you are going to really use? Estimation. If it is in advance, you are preparing cost sheet. If you are preparing this during the production, it is a real. Cost sheet or cost statement or costing anything is just a futuristic approach. It's a demand based, need based. It's not like your financial statement, post-mortem report. It's not post-mortem report. It's a futuristic approach. What you are going to do, maybe tomorrow or today, or what you are doing, same thing you can prepare. Okay. So next one is direct labor plus direct expenses is equal to prime cost. Okay. Next, look at this statement. Work overheads. I mean, factory overheads, or work overheads, or production overheads, or manufacturing overheads, all are same. What are they?
Indirect.
All indirect costs that may occur in the production process. Example, factory rent, factory manager salary, factory electricity, depreciation, etc. Okay, we are adding that. That is called gross work cost. And then what you are doing is last year or last cost period, you might have left out with unfinished goods. It is not just a raw material and it is not even finished goods. It's called work in progress. That work in progress will be converted into finished goods in this period. So what you have to do, you have to add the opening stock of work in progress minus what you are estimating to be the work in progress of this current year. Adding the last year cost, because that product is going to be produced further. It's going to be moved further. Okay, we already have a cost. Opening stock of work in progress cost minus closing stock of work in progress cost. If you do so, you will get factory cost. Factory cost. So all direct is equal to prime. Prime plus factory overheads plus minus work in progress is called as work cost or factory cost. Okay, work cost or factory cost. Next, we are adding with the admin overheads. Forget about this. We are adding admin overheads, office and admin overheads, along with factory cost. Prime cost plus factory overheads adjusted for working progress is called as factory cost. In factory cost, along with factory cost, we have to add the next level indirect cost that's called office and admin overheads. That's what we adding. You can write one by one. Suppose here add admin overheads is given. You can write one by one depending upon the nature of the business factory. You have to add, say for example, office salary, office manager salary or office rent, office furniture depreciation, office electricity bill, purchase of trade journals in the office, anything that is indirect nature relating to admin should come under one by one in this category. It is not written here, but you have to write one by one, depending upon the case. Some case, one or two expense will be there. In some other case, maybe 4 or 5. Okay, so we have to add all those individual items under the heading called administrative overheads. Okay, that is called cost of production. If you add the office and admin overheads along with factory cost, the answer you have to call it as cost of production. Here, cost of production. Then after cost of production is computed, we have to take the last year unsold stock, which can be sold in the current year. Cost of opening stock of finished goods minus closing stock of finished goods. If we adjust this opening and closing stock of finished goods along with cost of production, the answer what you are getting is cost of goods sold. Really, the cost, what you spent for the goods, what you sold, or what you are able to sell. Okay. Cost of goods sold. On this, we have to add, on the top of this, in addition to this, you have to add the, which one? Marketing overheads, forget about this. Marketing overheads. Or, I mean, selling and distribution overheads in our context. Selling and distribution overheads. Example for selling and distribution overheads, delivery van expense, warehouse keeper salary, warehouse insurance, depreciation on warehouse building, salesman commission, advertisement, free sample given to the potential customer. All these are indirect expenses happening at the stage of selling and distribution. That we have to add one by one under the category called marketing overheads or selling and distribution overheads one by one. If you add that with the cost of goods sold, you will get cost of sale, real value of sale, cost. On that, you have to add margin, profit. If you add profit to this, that will be called as cost of sales plus profit should be equal to selling price, sales. Okay, sales. Yes.
Can you just go on like three different phases, right? The production, officer, admin, and the sales.
Yeah.
But if you see there, it's only work at a factory cost and the cost of production and directly goods sold and sales. Actually, there is no separate category in this sheet.
Separate category for what?
Admin and office.
Is there no? Admin, this is admin.
Still, it's categorized under number 15 cost of production. So it's part of production expenditure.
No, everything is production only. See, even though it is administrative expense, that is for helping the production. In that manner, it is referred there. See, all direct is called price. All direct total is called price. Prime cost. Then plus factory overheads we are adding. If there is any work in progress, if you adjust that, the result is called works cost. Works cost means in the factory that much is spent. Okay, plus admin overheads is equal to cost of production. If you have finished goods, later you have to adjust. That's called cost of goods sold. After that, you are adding marketing expense, marketing overhead. That is called cost of sales plus profit is equal to selling price.
Point here, when they separated sales, we can't get a separate category for office and admin and everything.
Office admin, it is there now.
Oh, it's there under the product.
Okay, we are not following this. I told you it's like that only. Direct material, direct labor, direct expense is equal to prime cost plus factory overheads plus or minus work in progress, opening and closing is equal to factory cost one stage, prime cost one stage, factory cost one stage, plus admin overheads. Okay, is equal to cost of production. One stage we are creating. See, factory cost plus admin overhead is equal to cost of production. Cost of production is adjusted for work in progress, opening and closing. It's called as cost of goods sold. One stage. Okay, don't worry about that number given there. Okay, plus selling and distribution overheads. is equal to cost of sale plus profit is equal to sale. We have stage.
Clearly decreasing the recoveries and scrap.
Yes, scrap that we need to adjust in the stage of factory overhead system. Before you arrive at the factory, or suppose you are planning to produce 10,000 units, but during the process you are estimating some 100 units will be scrap. Scrap need to be added. Why you need to add? Scrap is an income for us. Is an income. Already, see, 1,000 units you produced by spending a cost of 10,000. 10,000. If all the goods are okay, what's the per unit cost now? Tell me, whatever. 10,000 is spent to produce 1,000 units. 10 rupees is the cost of 1 unit. Okay. Now, you found that you estimate that 100 units will be not processed further. It's going to be taken away. Now, how many units are going to be processed further in this example? 900 units. To make 900 units, how much is spent so far? How much is spent so far? 10,000. So 10,000 divided by 900 is the cost of production up to now. It is going to be further added. But the 10 units, 100 units you've taken out now, that you are not just going and throwing in the dustbin. If you do so, no need, you can just ignore and you can go further. But that is going to be sold for somebody. That's called scrap. You are selling for somebody, that you are receiving money. It's an income. So that income you have to minus from the total cost of 10,000. Suppose you are selling it for 100 rupees. So 10,000 minus 100, 9,900 is the total cost. What is spent for producing 900 units. From there, take. Cost per unit will increase because of scrap, because of taking out the units. If you sell that unit, it will not increase that much. The quantum of increase will be little reduced. Because of 100 rupees what you are getting from scrap. It's loss, but somehow it is an income for us. Loss is reduced. If it is not sold for anything, loss remains the same. So this is what we call it as cost sheet. Okay, there are some expenditure, there are some items which we may think as an expenditure, but cost accounting will not allow you to write that in the cost sheet. Also, there are some income which you think that is an income for a company, or maybe a real income, but cost accounting will not allow you to write that in the cost sheet. Example, interest paid to bank on your loan, it's an expense. But have you seen anywhere in the cost sheet about the interest? No. It is not really a cost. You don't have money, you borrow and you produce. Further, why should I pay more money as a customer? Okay, so interest on loan, interest on debenture, income tax, what you pay, all these things are not to be included in the cost of a product. It is not a cost, it is a finance cost. It is about financial accounting. Similarly, what you receive as dividend, what you receive as some income from the bank of interest, all those things should not be minus from your total cost. Because it's your own income, company's income, not related to this particular production process. So exclusively you are making it. Similar to that, suppose you are doing a production process in your car shed, in your domestic house, car shed is free, you are utilizing that car shed for your production purpose. You are not paying anything to the rent. But in cost sheet, you have to consider that also as a rent what you pay. You are not paying anything, but you should consider as a notional rent. What is notional? You really not pay to anybody. But if you have not used your own property, your own asset, you would have taken some building for rent. How much you would have paid? That need to be taken into consideration while calculating the cost of total production.
Is it the wish of that, it is depending upon?
Not wish. It is compulsory. It's a logic. It's a logic. What is the logic? If I do not consider that as a cost, my total cost of production will be underestimated. I may end up in selling for lower price. Because my asset was already utilized for this purpose. So it is a genuine reason you can add that, you should add that cost in your factory overheads, notional rent for factory. Because your competitor might have taken a
When
place for rent, he would have added it. So to bring on board with that, you have to add. Okay. If you are very generous enough, no sir, I don't want to add. You can add first, last you can do, your margin you can reduce.
but as per company law, we have to add that notional rent.
Nothing law. Your cost accounting is everything is custom. No law is compelling you to do this cost sheet. Nobody is telling you.
So again, it is a wish.
If that is the case, preparation of cost sheet is the wish. It's optional. Preparation of cost sheet itself is optional. Coming to the class regular to the Sunday is optional. Much before that, taking EMBA is itself is an option. In that way, it is. Preparation of cost sheet is optional. Why is optional? No law is coming and telling you to prepare a cost sheet. It's an internal process, internal record. You want to know what is the cost, so that I can fix some profit on the cost to make myself to show the price of the product to the customer.
But some auditing companies require.
Yeah, cost audit is there. If you're having some turnover more than 50 lakhs rupees, production company, manufacturing company, cost audit is compulsory. That time you have to make some costing records, not just a cost sheet. Costing record. Government wants to ensure that whether you are selling the product in a genuine and reasonable price or not. For that, cost audit is compulsory. Not for other companies. Company law does not have anything on this. Okay. ICWA is there, no? They are telling you have to have some cost accounting records. That records are compulsory.
What is the difference between records and?
The records are nothing but something what you are keeping for your recording purpose of material in, material out. Okay. Suppose production department is there. Storekeeper is here. Storekeeper cannot just send material to production department. There are two records, bin card and stores ledger. Production manager will send a letter to whom? To the product, storekeeper. Stating that we are going to produce this many units of output of this nature, this product. They'll have a code for that. Okay, this product we are going to produce. For that, we need 20 kg of this material A. Please send it. This is called material requisition slip. MRS. Nowadays, in the ERP, just they'll raise it, it will pop up in the storekeeper system. The storekeeper will approve. Really, somebody will be there, they will take the material and they will just go and supply in the production premises. Okay, this storekeeper will keep two records, either by manual or in ERP. The two records are called as bin card and the stores ledger. Bin card records the quantity of the material. Balance available, opening balance plus purchase minus issue equal to closing balance. Similarly, same thing along with price, one record is there, that record is called stores ledger. Bin card and stores ledger both are one and the same, with the difference of one respect, that is, bin card has only quantity. Stores ledger has both quantity as well as price. This is called record. This is one of the records. There are so many records like that. Similar to this, the store, production department maintain a record for them to have proof. Later, nobody will come and tell you, taken 20 kg, but use only 18 kg, where are the 2 kgs? Production manager may take misappropriate the goods to control, to avoid that misappropriation. We have a lot of records. Okay, come back to this cost sheet. So, cost sheet, anything is to be asked? Cost sheet can be prepared. You can have 2 columns along with these two, totally 4 columns. Maybe cost per unit you can divide in each and every stage also. Material cost, 10,000 units you are using. Okay, per unit how much you are using? Total cost of material divided by number of units produced is equal to per unit cost. You can have 1 more column or 2 more columns. You can make, or no sir, I want to find out only last stage per unit. You can do so. Okay. Any doubt in this? Those who are online, any doubt? It is just an addition, but you should not have last answer only correct. You should have a stage by stage, all the answers to be correct. Prime cost should be correct. If you add everything, of course, you are going to get the final answer is equal to 10. But that is not the matter. You have to get it in the each and every stage. Why stage is important? For prediction, next year prediction, what you do is, you just connect the factory cost with prime cost. For prime cost of 1 lakh, 20,000 is the factory cost. So 20% of prime cost is always the factory cost. Next year estimation. Direct material, direct labor, direct expense, we are sure about it. To make one notebook, 20 rupees is the price of material, 5 rupees is the labor cost, another 2 rupees is the expense. In our example, 20 plus 5 plus 2, 27 is the total cost of primage. To make 27 rupees of prime cost, what are the other indirect costs that we can easily estimate based on the previous year real costing? For that reason, the prime cost, factory cost, and then cost of production, cost of goods sold, cost of sale. The stages are important. What's the time? Do we have a break now or do we have time? What is that? 10? We can take, no problem. Okay, so after coming, we can work out cost sheet. Okay. Those who are online, any doubt with regard to the statement of cost? Is it understandable? Cost sheet format.
Yes, sir.
Yes. We'll take a break for 10 minutes. Then we can prepare a cost sheet. Thank you. Hello, sir. 1 second. How do we mute this? What do we just why is three subjects at the same date? Who was given first? When is the last date for first? For all the three subjects. We get credits for accounts. Looking for all, yeah. Right. And if the other subject is same way. So you get 16, 17. For accounts. 2:30. 12:30 ಅಲ್ಲ.
వీడియో ఆటోమేటిక్ అలా వస్తుంది నిజం రాస్తుంది ఇట్లా వాయిస్ ఎట్లా ఉన్నాయి
Hello.
Those who are online, can you hear me?
Yes, sir.
Okay.
Yes, sir.
Yeah, we can start now. I am displaying a question, illustration number 2. Are you able to see on the screen, those who are online?
yes sir.
Yeah, please go through that question for a minute.
Sir, we can't hear you. Yeah, am I audible now? Yes, sir. You're audible.
Okay. Yes, sir. I mean, displayed a cost sheet question for you. I have just read the question for you. That time only you were not able to listen to me, I mean, hear me. You can just have a look at the question. Data given to us, opening stock of raw material, work in progress, and finished goods. Similarly, closing stock.
I'm not able to hear you again.
Sir, we are not able to hear you.
How's that boy to be here? He wants to learn. He wants to do EMBA, man. Yes, finally I'm audible now.
Yes, sir.
Sir, yes.
We be here for 2-3 minutes. 2-3 minutes we be here. Okay. So I was reading the data for you. And then if we are asked to prepare a cost sheet showing this information, that is prime cost, cost cost, that is factory cost. Another thing is cost of goods sold and also net profit. Okay, am I audible? Is it perfect? Unlike.
Yes, yes.
So we have to prepare a cost sheet out of this information. Please have a heading, take a notebook or a sheet of paper or an Excel sheet. You can prepare this cost sheet of ABC Corporation for the period 1st June to 30th June. Take a table, particulars, amount. Number of units is given. Total number of units. Number of units not given, so one amount column is enough. Cost sheet or statement of cost. First, opening stock of raw material. Or at the top of that, you can write materials consumed. The heading, materials consumed, underline. Under that, you can write opening stock of raw materials, 60,000. 60,000 is the opening stock of raw material. Plus purchase of raw material. What is the purchase given in the question? Purchase is how much? Look at the question. Purchase is 4,80,000. So you have to add purchase of raw material 4,80,000 minus closing stock of raw material 50,000. Yeah. Opening stock of raw material plus purchase of raw material minus closing stock of raw material, that will be equal to materials consumed. 4,90,000 is the material consumed. Any doubt in this? Data. You want to see the data? Yes.
Can you zoom it?
Yeah. We do that. It's not downloaded, I think. 3, where the top. Visible?
Yes.
Yeah.
Where is it? Closing stock of raw material?
Closing stock of raw material. 50,000. Cost of raw material in the beginning is 60 and at the end is 50. So 50 is something about end. End is called closing.
Opening is 60, huh? Yeah.
60. All right. So opening stock of raw material plus closing stock of raw material minus opening stock plus purchase minus closing. Okay.
What was the purchase cost?
Hello, it's here now. 4,80,000. Then we have to add the direct labor. Look at the information given to us in the question. Is there any direct labor? Yeah. Wages paid 2,40,000. Wages, direct wages or direct labor. We have to add 2,40,000. Wages paid is nothing but direct labor or direct wages. There is no direct expense in this information given to us. There is no direct expense, so we are leaving it. Only two.
What is the goal of that?
These two added together is called prime cost. Since there is no direct expense, we don't add it. We add only two, direct labor and direct material is equal to prime cost.
Sorry, sir, after raw material?
After raw material, see, direct wages, direct material is confirmed now, increase. Direct material. After that, wages. After that, wages. Direct labor and direct wage for the same. In this question, it is done wages paid. Wages paid. Okay, so it's called direct wage. So what's the prime cost now? Prime cost is equal to 7 lakh 30,000. After that, what do you add? Overheads, one by one, all the overheads. First one is factory overheads. Add factory overheads. Factory overheads. Factory overheads given in the question as how much? 1 lakh. Look at the data. Factory overheads. It's given in the name of factory overheads itself. Some question they may be giving you factory rent, factory manager salary, factory depreciation, factory lighting. If it is there, you can write one by one here also. In this question, it is totally given. That is 1 lakh. Factory overheads 1 lakh. So you add it with the prime cost. Look at this. Like this, you want to add prime cost plus factory overheads. Okay. Don't write anything there. Just add factory overheads. Next line plus opening stock of work in progress. Don't give this breakup of work cost here. We'll just give breakup here only. C only is called as works cost. Don't write here works cost. Leave it. Don't write anything here. Okay. Don't write this total also. 7 lakh 30,000 plus factory overheads 1 lakh. Don't write this line and don't write this total. Leave it. Next slide. Already written also okay, no problem. That breakup we are not following. That's why I told you. In the format I given you, that time I did not tell you that breakup. Don't do. If you have done, no problem, leave it. Next, add opening stock of work in progress. Add opening stock of work in progress. No need of adding, just keep it there. Add opening stock of work in progress. Next slide, minus closing stock of work in progress. Closing stock of work in progress 15,000. So now we have 7 lakh 30 plus 1 lakh plus 12 minus 15. Next line, draw one line and write the amount. How much you will get? That is called works cost or factory cost. Both are same. Works cost or factory cost, both are one the same. In this case, they are given two different, but don't worry. You write only one. 8 lakh 27,000 is called as either factory cost or works cost. Okay, prime cost plus factory overheads, all the items of factory overheads, plus work in progress opening minus work in progress closing is equal to factory cost or works cost. Here, next, plus. Are you okay up to 8,27,000? Yeah. Online people, up to 8,27,000 is it okay? Anybody one can confirm?
Yes, sir.
Okay. 8,27,000 plus administrative overheads. Plus administrative overheads. Look at the data given to you. If it is given separately one by one, we have to add one by one here. I think in this question, total is given. Administrative overheads 50,000. You take 50,000 here. Administration overheads 50,000. If we add the admin overheads with factory cost, you will get cost of production 8,77,000. Cost of production 8,77,000. 8,77,000. Cost of production. After cost of production is found out, we have to add the opening stock of finished goods and minus the closing stock of finished goods. We have to give adjustment for, we have to take care of this opening and closing of finished goods. Opening and closing of finished goods. It is given in the question 90% is opening stock of finished goods. Look at the question. Look at the data given in the question. Stock of finished goods. In the beginning it is 90. In the end it is 1,10,000. Opening is 90, closing is 110. Add the opening minus subtract the closing from the cost of production. Cost of production, we already found out. Adding the opening stock of finished goods, minusing the closing stock of finished goods. The result will be called as cost of goods sold. Cost of goods sold.
It will become 8,50,000.
8,57,000 is the cost of goods sold. With the cost of goods sold, we have to add selling and distribution overheads. In this question, the total selling and distribution expense is given as rupees 25,000. Add 25,000 rupees there, and you get cost of sales. Cost of sales. Look at the question. Anything about net profit or profit is given. Sales is given. How much sales? 10 lakh is the sales. So we don't know what is the profit. We have to find out the profit. Actually, cost of sales is 8,82,000. Next one, write net profit. Don't write the amount. Write sales. Sales is given. This figure is given in the question. 10 lakh is given. If sales is 10 lakhs, cost of sales is 8,82,000. What is the profit? The difference between sales and cost of sales should be called as profit. So 10 lakh minus 8,82,000 is equal to 1,18,000. That should be called as profit. In some question, what they will do, they will tell you how much profit they are expecting. That time you have to add that profit with the cost of sales. Sales you have to compute, you have to calculate. You have to recommend the company how much rate, how much price can be sold.
So the net profit is considered 1,18,000.
Yeah.
So sales is written below. Wait.
If you want rate above, you can write sales above. No problem. Normally, A plus B is equal to C. Cost plus profit is equal to sales. That's why it is written like that. Cost plus profit is equal to sales. This is the figure what you found out. 1,18,000 is what you found out. This is already asset right. This is already given in the question. If I sell the total goods for rupees 10 lakhs, I can get a profit of 1,18,000 because my cost is 8,82,000. Yeah, for 1 month. This is the sheet for 1 month. We are lacking the data regarding number of units. We don't know what is the number of units. That's not given. If it is given, we can divide this 10 lakh by number of units. That is equal to per unit selling price. You have to divide this 8,82,000 by number of units. That is going to be the cost of sales per unit. If you want, you can add one more column here if the unit is given. We can do the division for each and every stage, each and every line also. Material consumed per unit, wage per unit, overheads per unit, like that. Okay. If it is asked, number of units will be given. Okay. Otherwise, we cannot do. Is the logic correct? Is the logic understandable? How do we do this? Look at this. There's one big question. Yeah. This is a question. Arnav Inspect Udyog Limited has the following expenditures for the year ended 31st March 2021. Raw materials purchased, how much it is? 10 crores. GST paid on that, 1 crore 80 lakhs. Right inward, that's a purchase transportation cost. Okay, wages paid to factory workers, contribution made towards employees provident fund and employee state insurance. And then production bonus paid to factory workers, royalty paid for production, amount paid for power and fuel, amount paid for purchase of molds and patents, life is equivalent to 2 years production. Okay. Job charges paid to job workers, stores and spares consumed, depreciation on building, factory building, office building, plant and machine, delivery vehicles are given. Salary paid to supervisor, repair and maintenance for plant and machinery, sales of his building, vehicles used by directors. Okay. And then insurance on plant, building on factory, and then stock room, stock and raw material. Insurance on stock and raw material. Expenses paid for quality contract check activities. Salary paid to quality contract staff. So many. So research and development expenditure. Expense paid for pollution control and engineering maintenance. Expenses paid for administration of factory work. Salary paid to functional manager of production, finance, sales. Salary paid to general manager. Packing cost paid for primary packing and redistribution of finished goods. Wages, fees, auditor, legal charges, like that, so many are there. Up to value of opening stock of finished goods and closing stock of finished goods, work in progress, and raw materials. All these things are there. Now, look at the information given down the table. Amount realized by selling of scrap and waste generated during the manufacturing process is 86,000. Okay. From the above data, you are required to prepare a statement of cost. Statement of cost is nothing but cost sheet for the company for the year 31st March 2021, showing prime cost, factory cost, cost of production, cost of goods sold, and cost of sales. Even though it is not asked you to do this classification showing, we are going to do that only. Cost sheet is nothing but having a breakup of all these pages. Okay, can we do that? Okay, take a permit, cost sheet of so and so company. What is the company? Arnav Ispat Udyog Limited. Cost sheet. If you are having your mobile with you, you can just take your question, because scrolling up, down is difficult for you or me also to do this question. You can take your mobile, go to your LMS and keep this question open.
So this sheet is available in Moodle that
It is under cost sheet. There is one module number 5. Under that there are study material. Under that there are 3 files. Take one file. In LMS, if you go, please find out this under study material. Under unit number 5. You can keep this question open, or someone has already opened, download that, put it in WhatsApp group so that others can use it. Just to refer the data. All right. Those are online also, please take your LMS, log in, go there and download this file. Keep it ready. The question, you keep it ready. Okay. I hope you are all having this question with you. Now let us do the answer for the cost sheet. Take a heading, statement of cost sheet of Arnav Ispat Udyog Limited for the year ended 31st March 2021. Serial number is not required, leave it. Particulars, amount. Okay, 2 columns. One is for particulars, another one is for amount, one more is for also amount. Are you all ready? Can we do it? Data is with you now?
yes.
Yeah. So as usual, first one, material consumed or direct material. Direct material. How do I know the direct material amount? Opening stock of raw material plus purchase of raw material minus closing stock of raw material. What is opening stock? 18,000, 18 lakhs. I did first one, opening stock of raw material 18 lakhs in the column, first amount column. Check it in the question. Is it there? 18 lakhs? Yeah. 18 lakhs is the opening stock of raw material. Write it in the first amount column. Right heading, materials consumed. Under that point number A. Opening stock of raw material, 18 lakhs. Plus purchase of raw material. How much purchase of raw material? ₹11 crore. How it is 11 crore 18 lakhs?
GST.
Purchase
Purchase of raw material.
That one, raw material purchase is 10 crores.
10 crore.
GST.
GST paid, you will take input tax credit now. You will take input tax credit, so you should not add that in the cost. Anybody is working on GST in your company? You pay GST to your supplier means you will collect GST from your customer. So you will take input tax credit. In that way, it is getting adjusted. Later on, we can do. Now we can just take the cost. Raw material cost is 10 crore. 10 crore, no?
Yes, sir.
10 crore. Plus price on purchase. That is 11,20,600. So really speaking, it is 10 crore, 11,20,600 is the real cost of raw material purchased. Minus closing stock of raw material. Minus closing stock of raw material is equal to material consumed. 10 crore, 19 lakh, 60,600 is the net amount of cost of material consumed. Any doubt in this? Up to material consumed. How to compute? The last question was given directly. Now it is little bit information, purchase, price, GST, many things are there.
What is it called as?
Which one? Which one, sir? This one. 10 crore, 19 lakh, 6,000 is called as material consumed, direct material consumed. Or simply direct material, cost of direct material. Okay. The second one is direct labor. Direct labor. Direct labor. Taking the question, any information about direct labor? There are so many informations were there. So many. Wages, how much? In the question, 29, 20,000, 29 lakhs, 20,000. Contribution to Provident Fund and ESI, 3 lakh 60. Bonus, 90. All these three things together is the direct labor cost.
Sir, opening stock, where is the value they are given, sir? Opening stock of raw material.
Taking the question, opening stock is given or not? Opening stock of raw material, that is amounting to rupees 18 lakhs. Was it not there? Is it there? Raw material.
Value of stock as on first April.
Yeah, value of stock as of 1st April 2020 is given as 18 lakhs. Where it is? That's why it's not able to.
Not able
In the
to-
beginning or at the end?
It's the end.
At the end. If it is there, it will come here, otherwise no.
29th.
Yeah, 29th April. All right. So next one is labor cost, direct labor cost. Don't write employee, direct labor cost, direct labor. Okay. So three things put together is equal to 35 lakh 70,000. 35 lakh 70,000. Any confusion in this? Other cost? Yeah, control is not direct cost. Quality control is specified for lot of 1,000 units. We'll take some few units and we'll check.
Wages paid, quality.
Yeah, wages paid, even though it is wages paid. Is it a direct or indirect, you will take? If it is allocated for one unit particularly, then it is direct, you will take it here, otherwise indirect. Okay,
It means testing each unit, then it will apply.
Yes. Randomly we are taking and some sample we are taking and checking. Okay, right. Next one is direct expenses. Point number 3. Direct expenses. Apart from wage and material, we are using some more amount. We are spending some more amount in the expense cost. That is royalty paid. What is royalty? Royalty. What company it is? It's for means what? Something which you are extracting from the something like minerals. Okay, if you do so, the landowner should get some royalty. There's the agreement between you and the landowner. Okay, so that amount is an expense, direct expense. It is directly proportionate to your output. If you extract 1 ton of iron ore from my land, you have to give me 1,000 rupees per ton. Like that, there will be an agreement, royalty agreement. Okay, so that is direct expense. So royalty paid for production is 1,72,600. Amount paid for power and fuel. If you are extracting 1 ton, how much power you are using? What is the cost of that power? It is directly relating to the output. That is why it is coming under direct expense column. 4,62,000. Then amortized cost of molds and patterns, meaning these your molds means what? Some kind of shapes, some kind of designs you use for your ISPAT production. Okay, for that direct cost.
The amount paid for fuel and power and fuel, they are not in the statement, problem statement, they are not clearly mentioned.
Okay.
It comes for direct or indirect.
Okay, so we are considering the direct.
If it is not given, we have to consider it as direct.
No, not like that. Huge amount is there now. 4,62,000. Again, you can check. It's internal process only. In exam, it's like this. We are doing it assumption, but in real life, we can ask what is this power. Okay, this power is for office, or this power is for factory in general, or this power is used for only production process. If it is only for production process, that comes under direct cost. Otherwise, yeah. So job work means you are not giving any labor remuneration. You are outsourcing it. I told you in the small example, notebook printing, the first page printing, you are giving to printing press and getting for the work that. Similar to that, here some job work is given to somebody, for them you paid based on the job. Number of jobs performed by them, you give some fees, it's not remuneration. It's not a salary, it's not a wage. You are outsourcing. Somebody is doing that work, for that work, a prescription is there. If I do this work, I will give it, I have to give it, you have to give me this much money.
Outsourcing is different and job work is different. Outsourcing is different and job work is different here.
What is job work?
In job work, what we do, we give the whatever the materials, raw materials required by them. We will supply the raw material. They will only make that because maybe that making setup is not with us. But in the outsource, we completely outsource that. You only use your raw material.
Outsource or completely outsourced?
No, it's outsourced.
Completely outsourced.
No.
The completely outsourced only I'm telling job costing. I mean job in your language of just giving all the material and getting it done. Okay, both the cases, in both the cases, we don't know what exactly it is. In both cases, we are paying some money that is related to a production process. So that is why it's called direct cost, than expense. Okay, outsourcing, everything they are only doing it in your language, completely outsourcing. I'm not going into technical, okay. But in accounting, whether you are doing completely outsourcing, in your language of outsourcing is completely outsourcing, or you are giving material, they are just assembling and giving to you. In both cases, it is a cost for production, direct cost. That's it. Job cost charged for production of job working. So that is 8,12,000. Total put together is 18,94,600. If we add this direct cost with direct labor and also with direct material, what we already found out, that is called as prime cost. That is equal to 10 crore 74 lakhs 25,200. Now, one by one, all the three overheads we have to take. If there is any work in progress, opening and closing, and if there is any finished goods opening and closing, that also need to be adjusted. If there is any scrap, that also need to be considered. That's it. Now, first one, add. What is that? Works overhead or factory overheads or simply manufacturing overhead or production overhead. Any one name you can use it, no problem. Factory overheads, underline factory overheads. We have to see in the question one by one. What are those indirect costs? Maybe a material, maybe a labor, maybe an expense, but relating to production process. We have to bring one by one here in this heading. Look at the question. Stores used is there. Stores. Stores means what? Indirect material. Stores, consumables, spares. Okay, these are all indirect material that are used in production process. How much it is given? 1,12,000. 1,12,000. First amount column, you write it.
So space consumed in the sense like what can be the space?
We have to go and ask this.
No,
In
in general,
company only.
in general.
But in
Because-
general,
Because it ultimately affect on the unit of the product also.
additional. In notebook company that stapler pin, or the thread, if it is not directly proportionate to how much is spent for, suppose you're stapling a pin in a machine. Yeah, one is that's why it's called indirect cost. Indirect cost. 1:1 means direct. If there is no such possibility, means indirect. Spares are nothing but any small material or any small ancillary material that is used in the production process. In expert company, what could be?
Mold screws.
Mold screws may be possible. Expert production, have you seen? In the factory visit you have done in Bellary and all, it will be there. No, I was not seen, but you imagine. Any spares, I mean, small parts of material. That is not a main, without that also you can produce that output. By doing some alternative material, with that thread, with that yarn, with that binding, we can do that. In my example, notebook. Okay, spares means any additional material that helps in the production process of the main product, stores and spares, and something consumable. We will say the word consumable. These are all similar to each other. Okay, technical. Of course, this is more related to engineering. More related to engineering, technical. Okay, we do not much have that idea, but we know the logic. What is logic? It's an ancillary material that is used in the production process. Next one is depreciation on factory building. See the word factory building, we are taking that here. Otherwise, it's not a depreciation is overheads. But what asset it is depreciation? Based on that, it goes to the respective overheads. Since it is factory building, it is brought under factory overheads. How much is given the question? 84,000. Side by side, you refer the data in the question. Yeah. Next, depreciation on plant and machine. Obviously, plant and machine is the production process, involved in production process. So it is taken here. Take it 1,26,000. Yeah. Next, repair and maintenance for plant and machine. That's also relating to production, so it's coming here, 48,000. Insurance paid on plant and machinery. Undoubtedly, it's a factory indirect cost. It's an indirect expense actually. Expense, premium is an expense. Expense cost. Next one. Insurance for factory building, 18,100. The insurance for stock of raw material. Insurance for stock of raw materials. Stock of raw material 36,000. What else is there? Salary for factory supervisor. Or simply supervisor is given. What is given the question? Salary for supervisor. Who supervisor normally will be in factory. In office, manager will be. That is why It is taken here of factory supervisor. 1,26,000. Next one, expenses for pollution control and engineering and maintenance. Pollution control is directly related to production. That's why it's coming here. Okay. 26,600. If you take a total, write it here in the first column only. Only write the total in the first column only. All the components of all the individual item of factory overheads. You written already. Just take a total. That total you name it as total factory overheads. Total factory overhead is equal to how much? 6,07,900. Keep it in the first column itself. Keep it in the first column itself. Next, plus opening stock of work in progress. First column itself we can write 9,20,000. Then minus closing stock of work in progress. After doing this plus minus, take the outer column. Already we have one amount in the outer column, that is prime cost. To that, you just add this. If you add, what you will get? Works cost or factory cost. I repeat again. Factory overheads written one by one. The total of factory overhead is 6,07,900. Is it right? Yeah. Plus opening stock of work in progress. Minus closing stock of work in progress. These three will give you one answer. A plus B minus C. Take that to outer column. Already in outer column one amount is there. What is that? Already in outer column one amount is there. What is that? Prime cost. With that you add it. How much you are getting? 10 crore 80,83,100 is called works cost. Got it? There is a brain cost. This amount. Okay, so 10 crore 80 lakh, that 83,100 is the works cost or factory cost. With that, expenses paid for quality control. In this, there is small addition here. Quality control cost, they are taking a separate one. Quality control cost and research and development cost. We'll also take it separately. Yeah. So quality control cost is how much? 19,600 plus 96,200 is equal to 1,15,800. In addition to that, we have research and development cost 18,200. Okay, quality control, research and development, administrative cost relating to production. Primary packing cost is relating to the stage of packing the goods in the factory itself. Without that, the food cannot be brought out from the factory. That's called primary packing. Add this, just copy all these values. Quality control check 90,600. Salary for quality control staff 96,200. Total is equal to 1,15,800 is the total cost of quality control. Then R&D 18,200. Then administrative overheads, that is 1,18,600, and salary for production control manager 9,60,000. Total is equal to 10,78,600. Minus scrap. Why you are minusing scrap? We are getting money. So from the cost, we have to minus the income to find out the net cost. That is 86,000. And then primary packing cost is 96. Put together, the total cost of production is 10 crore 93 lakhs 5,700. Ten crore 93,000 5,000 93,000 sorry 10 crore 93 lakhs 5,700 plus opening stock of finished goods minus closing stock of finished goods 11 minus 18 is equal to cost of goods sold 10 crore 86 lakhs 5,700. Yeah.
Salary paid to supervisors
Salary paid to supervisor, yes.
is coming in the.
Factory overheads.
And in the below.
Yeah.
Again, there is a administration cost.
Yeah.
For the factory worker.
Correct.
Is coming in the, administrative overhead.
Yeah.
But why this, the salary paid to supervisors is not coming in, overhead side?
It's coming under overhead only, no? Salary paid to supervisor is also overhead expense only. We are taking in overhead only.
It is coming as a direct proportionate to the product.
No. It's not coming under overheads only. Under factory overheads, we have taken. We have taken under direct labor. We have considered under factory overheads, production overheads. Yes. It is coming under factory overheads only. We have taken under factory overheads, not under wage. Direct means will go to wage, direct labor. It's not taken to wage. Okay, so cost of production is 10 crore 93 lakhs 5,700 plus minus adjusted for opening stock of finished goods and closing stock of finished goods. We will get cost of goods sold 10 crore 86 lakhs 5,700. Is it okay? After that, 10 crore 86 lakhs 5,700. Now we want to talk about which one? Overheads relating to administration, purely administration. Administrative overheads. Or you can have these as a office overhead. Whatever so far done is relating to production. Now especially for admin. Depreciation on office building, repair and maintenance of a vehicle used by director. Salary paid to manager finance and accounts, salary paid to general manager. After that, salary paid to general manager, fees to auditor, fees to legal advisor, fees to independent director. All these put together is 27 lakh 69,600. Please copy this. It's a little more informative question. Which one? Yeah. Is it fine? We have taken a small change in that breakup. Normally, we take all the administrative overheads in operating cost admin overheads only. But we have taken one small breakup in between. That R&D and other factory, production related overheads, they take a separate breakup. It is not necessary. We can just go with our own format. But now it does not confuse. Since it is there a ready-made answer, we can just follow that. In exam, if it is asked, you can just have only 3 overheads a day. One is factory, admin, and selling and distribution. Anything relating to production, factory overheads. Anything relating to office and admin overheads. Anything that is relating to marketing, selling and distribution. Only 3 headings enough. They have taken one small modification in between these because they already found out that cost of goods sold. After that, they are talking about admin overheads. But in our format, what I told you in the beginning, before the break, I've taken this inside before the cost of goods sold. That you can follow. And again, this is only an individual internal document. However, whatever you want, you can make it. But there's some logic. That's it. It's not having any format. It's not having any legal binding on preparation. That's why they have taken small changes. Okay.
So in this, after cost of goods sold, they are adding the administrative overhead.
Yeah,
But it should be,
that's what just I told now. They have taken a small change here. They have taken a small difference here. What we told and what they are following. Okay, small changes they have taken because of these companies having lot of other expenditure, R&D, production, so many expenditure they have taken. But logic is all direct frame cost, all indirect are called overheads, free overheads only. First is factory overheads. With the frame cost, add factory overheads plus minus work in progress is equal to factory cost or works cost. After that, add the admin overheads plus minus work in progress. Finished and closed. Opening and closing. That's called cost of goods sold. Before that, cost of production. Only if you add the works cost with admin overheads, that's called cost of production. Plus minus your working, finished goods. It's called cost of goods sold. Plus your marketing expense, marketing overheads, selling and distribution overheads called cost of sales. That's a very important. Okay. But in this format, you can have some flexibility of adding here and there something depending upon your requirement. This company has, this author, not company, this author has taken a small change in the nomenclature. Okay, just to follow this question. But in general, if any question there, normally some 20 information will be there. Only relating to this clear-cut idea will be there, whether it is production or admin or selling. Only that you have to identify what overhead it is. That's it. Okay. And then the logic of sequence. Material, labor, cost. Expense is equal to prime cost plus factory overheads plus or minus work in progress is equal to works cost. Works cost plus admin overhead is equal to cost of production. Cost of production plus opening stock of finished goods minus closing stock of finished goods equal to cost of goods sold. Plus, overheads relating to marketing. It's called cost of sales plus profit is equal to. Complete this. Administrative overheads, depreciation on building, office building. Repair and maintenance for vehicles used by director. Salary paid to manager of finance and control. Salary paid to general manager. Fees paid to auditor. Fees paid to legal advisor. Fees paid to independent director. You know independent director, right? Anybody who is not relevant, relating to the stakeholding of the company. Sitting fee, that's called sitting fee. Is equal to 27,69,600. Then selling overheads. Repair and maintenance for sales office building. Salary paid to sales manager. Performance bonus to sales staff. Then distribution overhead. They again dividing into two, selling and distribution. You can have only one heading. Selling and distribution, under that each and everything. Depreciation on delivery van. Packing cost for distribution. Wages of employees working in distribution of goods. Summing to 21,28,000, right? Put together, selling and distribution. 1210 plus 918, total is equal to 21,28. 21,28,000, these two put together, I'm talking about. Okay, that is equal to cost of sales. If you add these two along with the previous figure, we'll get 11 crore 35 lakhs 3,300 is the total cost of sales. There is no profit given, so we are not able to find out the sales amount. There is no sales given, so we are not able to find out the profit amount. We just stop up to cost of sales. It is the management decision now, how much percentage they want profit on this. So management may say, I want 20% on cost of the sales. So calculate 20% on this, add that as a profit, find out the sales. Some company will say, I want 20% on sales. If my sales is 100 rupees, my profit should be 20. If that is the case, how much on cost? 20 on 80. If my sales is 100, my profit is 20 means what is my cost? 80. Now this is my cost. 20 by 80 into this is equal to my profit. If it is told in the question, the management wants 20% as profit on sales. 20% on sales means 20 by 80 on cost. 30% on sales means 30 by 70 on cost. Okay, if it is told on cost, 20% on cost means 20 by 100 into this cost. That's equal to profit. That depends upon the question. Okay, if it is not asked, sales and profit, we will stop after this. Yeah, look at that. No, GST paid on purchase of raw material would not be part of a cost of material as it is eligible for input tax credit. I told you the input tax credit you are going to get it back. It's a huge manufacturing company. So even if they buy furniture or any asset also, that input tax credit they can get it. So they can easily avail the input tax credit on purchase of raw material. You know, input tax credit. When you pay tax, you already paid on this purchase, 18%. When you sell goods, you will collect it. Suppose you paid 100, you collected 150, you will pay to the government of India only 50. So in that way, you are taking the input tax credit. That's the beauty of GST. Okay, net, you have to pay the government. So in that way, it's not a cost for us, only we are getting that from the customer. So GST is not added with the cost of.
By tax paid by purchasing the fixed asset.
Yeah.
That time.
Yeah, that also you can take that input tax credit.
That time also we can.
Yeah, whatever GST a company pays on any material, on anything. But of course, GST is again three. Your SGST, IGST, and CGST. If you buy the material from within Karnataka, you are paying CGST and SGST. If you buy from Maharashtra, you are paying IGST and
State of 18%.
depending upon the goods, 18%. Yeah, 9 plus 9 or 6 plus 6, 12 or 18, as the case may be. Then set off rule is there. Set off rule. If you pay input, if you pay tax of IGST, if you pay tax of SGST or CGST, what you are collecting, how do you set off it? That's the rule. ACST can be set off against SGST. CGST can be set off against CGST as well as IGST. That's the rule. But anyhow, you definitely have a tax collected because you have cost of sales as 11 crore 35 lakhs. Definitely you will get a tax input. That time will minus, so there is no need. Even though you are not able to sell this in this year, next year you will sell it. Definitely. So tax GST should not be added with cost of raw material. It should be excluded. Though you pay. Okay. So this
Okay, so why this the sales and distribution cost is not included in the cost of goods sold? What is the main the purpose?
it is included now.
No, in the cost of goods sold, the sales and distribution is not included.
Cost
Why
of
they are
goods
not-
sold is nothing but cost of goods which are available for selling. But marketing comes after that.
It is marketing.
Cost of sales means what? Cost of goods sold. The word sold is there. It looks like already sold. It's not sold. Cost of goods that can be sold. Available for sale. But how much you are selling? For that, how much you are spending? Cost of sales includes everything. Sales is the final term. Cost of sale. To sell this, what is the total price I mean, total cost I spent? 8 rupees. In that 8 rupee, everything is included except profit. Cost of sales. Cost of goods sold is nothing but how much goods are ready for selling. In that, distribution cost is not included. If you add distribution cost to that, it will become cost of sales. The cost really what I am selling, what is the cost for that? What is available there in my godown is called cost of goods sold. Up to warehouse. In the warehouse, after the warehouse, everything if you add, it becomes cost of sale. Cost of sale. So this is what cost sheet. Yeah, do we have any more class? Are you missing any more? One more class. So we have some more topics that we can discuss in the next class. Now we can ask some doubts, anything relating to so many chapters what we covered so far.
Sir, can I know in short, like, how to present ratio analysis?
In the assignment. Assignment. Have you calculated?
Not yet.
Yeah, presenting. What do you mean presenting? Presenting, I told you that very detailed. Today, nowadays, what is happening? Everything is given. Detailed. Only you have to just open your mouth. Spoon will go inside. That's all. That much readily available. What do you mean by presentation? I told you, you have to make lastly one table. Serial number. Name and two companies, no? Two companies, right? Company A, company B. Under that, so many ratios. 2 years, 3 years.
2 years.
2 years. Okay, serial number. First one. I told you, no, how to present that.
Yes.
One table you have to make.
Yes.
In the table, all the 2 years, all the two companies, all the ratios. How many ever you calculated. Serial number 1, 2, 3, ratios. Company A, first year, second year. Company B, first year, second year. Imagine the table. Serial number 1 column. Ratios 1 column. Okay, company A, first year, second year. Company B, first year, second year. How many columns are there? 1, 2, 3, 4 columns are there. Last 2 columns are subdivided into 2 columns. First year, second year. In this, suppose serial number 1. Okay, Roman letter 1. Solvency ratios. Under that, point number A, debt equity ratio. Point number B, interest coverage ratio. Point number C, some other ratios. You can take some 3-4 ratios. Now, in company A, first year, what is the figure? Company A, second year, what is the figure? Similarly, company B, first year, what is the answer? Second year, what is the answer? Like that, you are making a master table. In this table, all the ratios what we computed for 2 years, for 2 companies are being displayed. Based on this master table, you are preparing some interpretation. You are writing some interpretation. Compare. Sorry, A company has more liquidity, more solvency than that of B company in both the years. Or only year? 1 year. In second year, B company has more solvency. So compare. Otherwise, company A has improved its solvency from the last year to current year. It is 2 years. Interform comparison. Interform means company A compared with company B. Intraform comparison means company A of current year's performance is being compared with company A's previous year performance. That's called intraform. Within the form. Between the form, within the form. So this is a table which you have to present in the last part 1 of the assignment. Component. After the interpretation, inclusion, reference. Okay, I have given that clear.
Do we have
Components in the last class.
financial statement of
Financial.
companies in the?
We have to present, we have to produce that yes, you have to do no first page.
We have to.
Yeah, one of the component is because otherwise how do I know? Suppose if I have a doubt to calculate and randomly I cannot calculate all the ratios of all of you for all the years for all the companies. I can take some random here and there some numbers, I can work out some logic. If that is close to that figure what I am getting, I may assume that you have done something good. Maybe 70 above percentage. If it is huge deviation, maybe 40 and less than 40%. Random. And then writing up your interpretation and you check how good can the interpretation. Of course, it is true, I cannot go and read everything. No teacher can do that. All the ratios, all the interpretation for all the students, for all the students, for all the age. So we have a logic. We have a magic of that logic. Applying that logic will make one.
So your request is for liquidity ratio.
1 second, somebody is asking. Yeah,
Sir, in the assignment too, there is one point that, point number 8 says that analysis of financial statements of two companies.
students who are online, somebody is asking something on assignment. So I asked them to ask some doubt. So far what we completed, but people are asking about assignment, so I'm just something on assignment. Please, if you have any doubt, you can just come in and they can add to the point. Now this boy is asking, analyzing,
Financial statements of two companies.
yeah.
In this, what, we can take the financial statement of the companies, but what analysis we have to do?
Good question.
So you have requested the three things, one is solvency ratio, the liquidity.
Exactly by your question. Yeah,
The solvency ratio, one is
you have to analyze the company with regard to solvency of the company. You have to analyze the company with respect to the activity of the company. You have to analyze the company with respect to the profitability, and you have to analyze the company with regard to activity.
But how do we calculate
How do we calculate
liquidity
liquidity
ratio?
ratio? Please refer the textbook, what I mean, material given to you in the LMS, or refer to the class what you are done in the 2 weeks before this. 2 class before this. Yeah. You have done in the class. Formulas are there, just like your other solvency ratios, formulas are there. Current ratio is one of the component of liquidity ratio. Current assets divided by current liabilities. If you refer the balance sheet of the company, current asset will be there, take the total of that. Same year, current liability of the balance sheet, you take it, divide the current asset by current liability, you will get current ratio. It is one of the examples for liquidity ratio. How do you talk about liquidity? You found out 3 ratios of company based on current ratio. Liquidity ratio, current ratio, absolute liquid ratio, or acid test ratio, or quick ratio, you found out. Now, this each and every ratios will talk about the liquidity of the company. You just write 3 lines. One about current ratio, one about liquid, I mean, absolute liquid ratio, another about quick ratio. You talk about the ratio. We are standard 1:1, 2:1, 1:0.5. If it is more than that, less than that, or equal to that, you have to give it. Okay. What format?
Yes.
Listen, 1 second. Gentlemen, 1 second. Yeah.
Example, here in the first question, you have less than various ends.
Okay.
So in the second question, there's huge hand raise.
Okay.
So likewise, in the very specific format, without mentioning companies on the expense will come under this category. So
Okay,
if you take
cost sheet.
cost sheet.
I'll add. I have.
If you have the other,
But anyway, it's only a very indicative one. If you have what you are asking, I'm understanding. I have that, I'll upload it in the LMS. Cost sheet pro forma. But that does not mean that only that, see, look at this cost sheet, even I am seeing this cost sheet, I was just randomly taken. I just take like that, so I take it randomly. This cost sheet has huge information because the company is of that nature. But I'll give you one pro forma. Okay, that pro forma talks about the general format of cost sheet. But it is not like your balance sheet. Balance sheet format what we had is exactly what is going to be there in the real life. That cannot be deviated because law. But this is not law, this is only a custom. So it may have here and there some changes, but what I am going to give you in the LMS is a standard format of your standard for your item. If you know about that, only that many information may come in the maybe 1 or 2 here and there, maybe extra or less, but more or less 90% to 98%. I do. Anything? Yes, sir.
can we download the statements from the statement?
Yes.
From money control and.
No, it's money control. You are doing analysis for money control company. Which company you selected?
The one is Bayer Science,
One is?
Bayer Crop Science.
Okay.
And
Which
one.
manufacturing company? Pharma company. Okay. Another one is? Okay, no problem. So both the companies are not giving you the financial statement to you?
Sir, I can find it, but can I mention the statement in the assignment?
No, first we will decide first question. Why the money control has come in picture? We don't want any money control, Yahoo Finance or anything. If you want, ask something about me, come and ask me. I will tell you. That is authentic information. Sir, what is your name? Ask me. Don't go and ask him. One gentleman has come today morning, what is his name? He may say something. That's one, he is called money control. Even though he is telling correctly also, don't believe him. Believe me. Go to A company limited. Download their balance sheet, download their income statement. Go to B company limited, download their balance sheet, download their income statement. If they are not giving, don't worry about them. Go to somebody else. So they are not giving. If they are not giving, where do you analyze them? Okay, go to their respective website, download the information. Then you have to reproduce that in the statement. Somebody was messaging, I did not reply regarding the same one. It is you? Which one? Regarding balance sheet and income statement. Somebody was messaging me. But I thought that is to be known to you automatically, so I did not reply. If anybody is there, please understand, you have to reproduce the statement again in your assignment. That's the starting point. After introduction, I have given detailed content of assignment. In the last class, detailed content, introduction. That's so. Yeah. If one of the component is balance sheet and income statement of the company. Yeah. Anything else? Anybody from online has any other concern, any doubt? Anything to ask or anything to say? No doubt with regard to any of these concepts from the journal to cost sheet. The next aspect what we are going to discuss in the next class is marginal costing. That concerns the techniques of cost. Once again, I told you there are a lot of methods of costing. One among them is unit costing or uniform costing. That we discuss. Similar to that, there are so many techniques of costing. Standard costing, variance analysis, marginal costing, absorption costing. There are so many. Okay, budgetary control, many are there. Among them, only one we are going to discuss, that is marginal costing. What is time now? We can discuss now only. So the already? Then we are. We'll discuss in next class. Please read something on marginal costing that is available in the LMS, or you can read from here. So, any doubt before we close for today? You are asking so many questions only on assignment. Assignment is just a process.
But it has a big data
Assignment should be an output of the learning process that is happening in the class. You should not learn only for it's only answer there. May take 5 hours. It may take 1 day. It may take 1 hour also. It's depending upon us now how they see the same thing in my regular class. I will do it for 2 weeks.
Because it's the last class, so.
One class enough.
Because we can keep multiple minutes for the revision from this.
Yeah, I will finish it by 1.5 hours. Remaining 1.5 hours. We can use it for discussion. Yeah, tips and tricks for the exam. We can keep that 1 hour at least cushion for those queries. So, point.
So again, one more question, on the assignment only. After the analysis of the financial statements of both the companies, all the ratios, there is one more point called comparison of performance of two companies. But in the statement itself, we are showing very clearly of the company A and B and first previous year and present year. So we have analyzing all the ratios of the both the companies.
You are computing all the ratios.
We are computing and 10 points is comparison of performance of two companies. But there we are already doing it. Then what we are doing?
Where you are doing, where you are doing and what you are doing. In the table.
The paper.
You are presenting the data, the result, output. Are you comparing there?
See that we'll come to what is the difference.
Easier to compare that.
You can see.
By seeing that, you write something. Mr. A is 7 foot tall. Mr. B is only 6 foot tall. B is shorter than Mr. A. Like that, it is you to write, not summarize, interpret.
Computing after ratios, we have to summarize them.
You have to interpret.
Yeah, what accuracy we are doing.
So there's one-
Or company A has more financial ratio or company B has more financial.
More financial ratio.
Then like
Same
operating,
number of ratios you can compute for both the companies.
you have to compare A is better, A is better than.
B is better in first year or B is better in
Yeah, that's
last year.
right.
That also can be. That is what interpretation.
But again, comparison.
Yeah. Comparison is, he is 8 foot tall, he is only 6 foot tall, that is comparison. Interpretation is why he is 6 foot tall and why he is 7 foot tall, that is interpretation. Interpretation means what? You are giving some opinion of you based on some logic for both data. Suppose you are just saying there is too much of traffic. Immediately you are telling, today there may be a festival in this area, so traffic is there, the festival, that's the interpretation.
The company profit is 8, one company can make a profit of 10. So if we give it.
Okay, please give some interpretation now of moneycontrol.com. Now money control is coming to business. Go to money control, go to any kind of accounting folks. They will give you some company's data and interpretation. You read that, similar to that you write it. Okay? Anything else? If anybody has anything else, you can write to me in WhatsApp or you can call me. Better call and ask. Because by sending a message, I'm not able to, the questions are sometimes not understandable to me. I think that it is simple question, you yourself can try to answer in another 1 hour. So I'm just leaving it. If you have any real doubt, please call me and ask. Okay, thank you so much. See you in the next class. Online students, do you have any?
Thank you, sir.
Nothing. Okay, thank you.
Thank you, sir.
Thank you very much. See you.